All right, guys, welcome to the Investor's Guide to Memphis Real Estate. I am your host, Dean Harris, and as always, I'm here with Mr. Douglas Skipworth. How are you?
Doing great. Thank you.
Thanks for joining us today. We are bringing you this podcast to give you the boots on the ground knowledge to be a successful real estate investor here in Memphis, Tennessee. Guys, subscribe to our YouTube channel, like Facebook, go listen on Spotify, all the other places that you can do. The link tree is in our show notes too, so you'll be able to see all the ways to connect with us. I also help buyers and sellers. So if you've got that investment deal that you'd like to write an offer on, you'd like to list, shoot me an email, dean@CrestCore.com, and I'll be happy to help you with that. Well, today's show is going to be a good one.
Yeah.
This topic, to me, is kind of resonating because of how it has shifted, this topic. So today we're going to talk about why investment deals are selling, what investment deals are selling, and why.
Okay.
All right. Which investment deals are selling and why are they selling? Okay.
Right.
I've had a ton of questions on, I've got a pocket of investors that are making offers and they're not getting the deals.
Okay.
And they have a lot of questions on why and what can I do different? And there's answers to both of those. And then I have some over here that are throwing offers at it that are getting them. Okay. So I want to give everybody kind of an outlook on what is selling here in Memphis from an investment property standpoint. I looked at other competitors, which of course we all know there's no real other competitors.
Right.
No, I've looked at other competitors and I've looked at other what people are selling, and this is holding true for them as well.
Okay.
So what is selling right now? The first thing that I talked about, we're seeing a shift. Okay. And let me describe what this shift is. A year ago, 2 years ago, we were selling mainly about $120,000 to $180,000 houses. We would get some in the 200s, quite a few. We get some in the 200, but that meaty part was that 160, 170, 180 range. Those houses were renting for $1,200 and $1,300, and that worked with a 3% interest rate.
Oh, right. Even though when the 1% rule, it worked because it
worked because the rate was so low.
You put a down payment or something and get a low rate.
That's exactly right.
Okay.
So that worked, right?
Yep.
Those are $1,000, $1,200 tenants, $1,300 tenants, and they were in that $180,000 to $190,000 range.
Okay.
Of a home price.
Yeah.
Now that tenant is only able to be into $120,000 and $130,000 house. The pricing of the houses has shifted. So the tenants that were up here are going to be now down here. And the people that were buying up here are going to be now down here. Because if you're buying a $180,000 house now to rent, you have to rent that thing for way more. Now you follow what I'm saying?
Yes.
Maybe I'm doing a terrible job of describing.
No, you're right.
But those tenants that were able to be in a $180,000, $90,000 house for $1,200, they're not in that house anymore.
Because the rent rates have
changed. So the investor that's buying that $180,000 house now, he has to get $2,000 in rent.
Right.
For that to make sense, he can't. He can no longer get $1,200 and $1,300.
Right.
Okay. So now those tenants are moving down, and they're having to.
Okay.
So what we're seeing is a better tenant base. So what I'm about to tell you is the lower price homes are working, and I'm going to tell you why and how and why you should continue to buy those. Okay. Lower price range houses are moving 50 to 150,000. And to be honest with you, it's really about a 50 to 120. Not a whole lot.
The bulk. Like if you were looking at a standard distribution curve and
is 50 to 120.
That soft middle is that.
So a 30 something houses, I guarantee, I don't have it in front of me. I should have brought it, but 85% are below 100,000. That's all that's working. Go get your mortgage calculator out and factor in 8.5% interest rate and find out what works. This is
less you're paying all cash, less you're putting a huge money down for a down payment.
That's right.
Those are
So the lower price homes are moving because of the interest rate. Now, the first reaction I got were I don't want that product.
Right.
I don't want. But you just heard me a second ago tell you
that the tenants have moved down a little bit as well.
Come down a little. Now, this isn't $500 dramatic decrease, right? But if you were to, and this is all new, and we're all coming into this new. So you guys are all buying new. Tenants they might be in that house for a while. They might be able to stay there. As soon as that lease comes up, though, the rent's going up. This is a market that is changing.
Yeah, and I don't think inflation is bad, but there's no doubt it went up, and there's a supply constraint.
Yes,
because of many reasons. When we've looked at housing inventory, it's been about the same for nine solid months. I went back and looked at the Memphis Area Association Realtor data, and it's pretty much been 3,000 available units since last summer.
What does that tell you?
Lots of different things, but
And
that's very historically low, if you remember. I mean, like
that's way low,
way low for inventory. So
we're used to having 11 to 13,000 houses.
I think it was that high during the Great Recession, and it's been, maybe 6,000, maybe half of that, but it's been a lot more. So it's historically very low.
Yeah.
I saw something the other day answering your question that the way the rates have increased for mortgage for borrowers, it is knocked out over 17 million home buyers. So to your point, right? So if people aren't buying homes, what do you think they're doing?
They're renting them.
And so if more people are renting homes, then that would increase
the
rent. So those people who are competing, as you mentioned, can no longer afford some. And so they're having to get.
And how many more people do you think can rent 800 to 1,300 that can rent 13 to 2,000?
It's different.
And it's making complete sense as to why this product is selling now.
Yeah.
So if you're still trying to figure out, a year ago I was buying 220, Dean, the rate couldn't have. Yes, it is affecting this that much. It's affecting it that much.
Oh yeah, like I said, I mean that was the stat for that had a big single family rental conference IMN down in Miami. So I was checking out all the stats from it, and that was the thing that one of the headlines from the kickoff talk, the keynote first address, is like 17 million people have been displaced from buying homes. I.e., they're renting, they can't buy, so there are more rentals. Build to rent's big, all these other things, but the point being that people have to rent houses. They're paying to rent houses. Rent prices have continued to increase, even though they haven't seen as dramatic of an increase. But they're just people who have to rent houses. So, I mean, when we zoom out, we're like, these are macro trends of rental housing is important.
Yes.
Not everybody's a homeowner. No. Memphis, we've been investing multiple years, a couple decades, but for both of us, and things haven't dramatically changed in Memphis as far as tenants and rentals. And it's like, this is a good rental friendly city and will continue to be. There are tailwinds pushing things forward that only help for investors and landlords and tenants as well.
And all of it. I have people ask me all the time, why do you invest here? Why Memphis?
Okay.
It's that.
Yeah.
It stays consistent.
Yes.
I used to ask you this question back in, the early days of me working here. It's like, you guys, had large portfolios way back then. And my question was, why Douglas, why here? Why here? Why this? How safe is this? Because if you don't have any, it's like investing. This could go wrong.
Yeah.
The one message that you always said was, hey, even during good and bad times, the rent has about stayed the same. Now, we've seen some increases the last few years.
Yeah.
But the demand.
Do you remember
the tenant base? What?
You remember why? One of the reasons why a mentor told us and taught us, and I have followed it for that 20 years, of rent is a direct reflection of wages, percentage of wages specifically, right? And so rule of thumb, right? Most people, when they're going and applying for a rental, they have to have about a third of their income. Their rent can only be about a third of their monthly income at a max.
Okay. Whew.
And so what has happened to wages over time?
Gone up.
They go up. And so people continue to spend up to a third of their rent, of their monthly income on rent.
Because it's human nature. They don't stay at the normal. If they're making more, they're like, let's get a little nicer place.
Yeah. Or the rents will continue to go up in
where they're sitting.
Great point. If they're ahead of inflation and the macro trends of the economy, then they can move up.
Yeah.
But if they're unstable, then they're staying in the same place. But guess what? Mm-hmm. We've talked about this. Like when that comes time for renewal, what happens?
Goes up.
It goes up, especially in this day and age. So as wages are going up, if you're ahead of it as a renter, you can move up. If not, you're staying here paying more. Again, it's just economics.
That's exactly right. And that's what's happening Even in our market, from the people shifting from one thing to the other. I mean, if you sit still, I got 3 emails yesterday for renewals. They all
are going up a little bit.
Go up.
Yeah.
We can get it. My first question here is like, I don't want to. Rather, I'm not. No, we got the ladies here. It's okay. We'll talk to them.
Yeah. Well, especially when they go out. I had a situation, a long-term tenant, 10-year tenant. I haven't taken my own advice, So that's what we learn from and take our own advice, right? So
sure.
So I'm listening. It's like, okay, they're coming up for renewal. They want a bunch of repairs, and I was like, it doesn't make sense.
Yeah.
Right. Like it doesn't make sense to do all of the repairs for where the rent rate is compared to where the rent should be. So I was like, here's the situation. Mm-hmm. I need to, at this renewal, I need them to move on so I can make some bigger repairs and get the market rent for this property. And they were like, never mind. Never mind. We don't need anything done. We're okay. Because it was because they went out and looked, like you've talked about in the past. They went and looked and said, whoa.
I was just about to say.
Whoa, we can't believe what we would have to pay to get what we have now.
I was just about to say it. If they call around, Douglas, everybody.
I know we've gotten some comments before on podcasts and stuff about like trying to stick it to renters. Like this isn't sticking it to renters.
I'm running a business.
And not to mention go out and try and buy. Like you can still be below and still provide a great service, and it might be below what the market is.
Yeah.
By raising your rents, you could still be below market.
Yeah, I mean like. The Chick-fil-A chicken sandwich doesn't cost the same as it did 20 years ago.
No.
It's the same sandwich.
And I'll tell you one thing, it doesn't cost as much as the other fast food restaurant's chicken sandwich because it comes with better service, it comes with higher quality, it comes with this.
So if you can take your home, I mean, that's a great analogy. I mean, like you talk about, hey, this doesn't make sense to do this any longer. Like I've had 3 and all 3 times, I imagine they're going to come back and say, hey, they've agreed. Because if they get on the phone and they start calling, well, no, forget this guy. But how can anyone expect, back to your comments about the rent, like how this is an investor show, not a tenant show, right? You know what I mean?
Yeah.
Like, so if I were looking out for the tenants, first and foremost, this would be a tenant show. We are there to take care of tenants. We're to provide a clean,
absolutely.
safe,
yeah. You can't
home that they can, have company over. That's what I like to. If you really,
there you go. If you can have company over, that's cool. Can they have company over? I like that.
Because I go so if I have somebody griping and doing what you're doing right there, I like send somebody out there, and my first question is, could they invite somebody over?
Yeah.
And if they can, I think they're good.
Yeah.
You can't. And I'm honest with that.
There you go. Yeah.
So anyway, I want to go back to the rent real quick before we wrap this up. I want to make sure that everyone understands that when I'm asking you to move down in price point, I'm not asking you to slumlord. I'm not asking you to enter into an arena that you don't need to be in. Because I just got done telling you at the very beginning of this podcast how the tenants are having to come back down.
Yes.
They're having to get that product that is a $125,000 house now, that the value in the neighborhood. They're not able to go rent the $180,000 and $90,000 house for $1,300 anymore. That investor can't do that.
Right.
Those tenants might be locked into it, but there's new tenants every day. You guys are new investors listening right now.
Yeah, man.
The majority of you are new investors
Good
listening right now. There's new tenants every day too. They're also coming into this understanding what they can buy. So I'm not asking you to get down into the weeds or get down into an area with a bad tenant base. You're actually going to get a lot better tenant base, in my opinion. I believe that's how it's going to shift.
Yeah, and I think one thing that we need to remember we haven't talked about that's directly related, and this is a show sponsor of CrestCore Property Management and our experience with CrestCore Property Management over the years, both in the Great Recession, during COVID, is that, and even through this experience, like collections during those off times or hard times are usually at their best.
Because why?
Because, thank you for asking, because of 4 reasons.
Yeah.
Right? There are 4 reasons. And that is when economic hard times and pressures come, renters, people in general, but renters specifically.
They do 4 things.
They prioritize 4 things.
I love this.
They prioritize their housing.
Yeah.
They prioritize their utilities. Mm-hmm. They prioritize their transportation. and they prioritize on their food. So yeah, they got to eat. So it's like, I got to have housing with utilities. I got to get to work and I got to eat. So it's like those 4 things. Everything else becomes discretionary.
Immediately becomes discretionary. Everything that they, but in tough times.
To a halt.
Yes.
Yeah.
On the day. Hey, today, because I've been in that situation. I mean, come on. Growing up.
Who hasn't?
I've been in that situation where sometime in life I've said to myself, hey, no more spending.
Yeah. You got to cut it off.
And that's what they do.
That's what they do. And so they pay the rent. And they pay the rent, and it gets really good, because during the good times, it's easy to get loose. Mm-hmm. In the hard times, everybody scales. They tighten the belt. They cinch it up.
It's easy to get hard too. It's easy to cinch up.
It's easy because you just cut things out. Like, I'm not doing that. I'm not doing that. I'm not doing that. I'm doing that. Yeah. Here's what I'm prioritizing. So because of that, that's why, to your point, it's a good time, and renters are paying.
Renters are paying, they have to pay, and you're getting a little bit better tenant. That's why I'm talking about this product today. So I want to make sure that everyone understands when I'm talking about this product, it is not, hey, Dean needs to sell homes, so this is what's selling, so go move down there. No, I'm giving you some reasons why you should. For one, it's the only thing that's working. But two, that tenant base is moving down. You're going to get a better tenant base. I'm just telling you, overall, I mean, it's not a 1-for-1, but overall, if you're running your analytics and you're doing this in that way, I believe you are going to be safe. I'm buying them. I mean,
I was just about to say, it's like, I just sold one in this price range that I was readjusting my portfolio. You remember, you listed it. We got a couple offers. We took one and we ran with that one. And then I had a friend seller with 8 properties, remember, who came, and it's right in this range for those 8 properties.
And they sold the second day we had them.
Yes.
Because they're in that price range, they're in that rental range, and that's what's working.
Yeah.
Good show today. I'm happy for this property. This was a little quicker one than we normally do, but I wanted to make sure that I got the message out about what is selling and why. If you're having questions about any of this, shoot me an email, dean@crestcore.com. Got a Zoom call tomorrow at 2 p.m. Shoot me the email for there. I'll get you the invite. And then our link tree is in the show notes. If you guys have any questions, you can catch us on all of it. Anything else?
Great.
Awesome show today, guys. We'll catch you next time. Thank you.